John Adams here, your host on the Real Estate Coffee Break, coast to coast, with our very special guest, John Schaub. Hello, John. How are you?
I'm wonderful, John. It's good to see you.
I heard somebody say recently that making money investing in single family rental homes was really just a matter of time and mathematics. Would you agree?
Well, I throw the people in that equation because it's not just time and mathematics. You have to have the right people renting from you, and that's to get the right people. You have to buy the right property, I think, and that is a property that'll be safe to live in, and a fairly quiet neighborhood. And that there's a reason that neighborhood's there. If it's shopping or schools or churches or whatever it is, there's a reason people want to live there. I rent most of my houses off of signs. That's where I get my best tenants. Now I put them on Zillow, everybody else does that too. But I want somebody who's driven by that neighborhood and seen my sign out on a big street and driven into the neighborhood and found my sign on a house and then looked at the house and then it's smart enough to call me off that sign. You're not smart enough to call me. I don't, you don't have to be very smart to use Zillow. You have to be a little smarter to call somebody and talk to them on the phone. And when they call me and I talk to them on the phone, that's, I can learn a lot about folks in about 5 minutes on the phone. So we can have a casual conversation about how long they've been in town and where they work and how many kids they have and how many pets they have. You never say, do you have pets? You always ask how many, because everybody has pets. It's just how many, So you learn what questions to ask. You learn what questions to ask. But you get to know people. People are an important part of this. People are an important part of this.
Indeed, they are. Well, who was it? Albert Einstein said that compound interest was the most powerful force in the universe. I think he may be right, because over time and understanding that mathematical relationship and working with people that are going to work with you and not against you, it's almost a formula for success, isn't it?
There's no question about the real estate business harnesses the power of compounding. Your rents go up at compounded rates. Your prices go up at compounded rates. What you don't want to do is borrow money and let it compound. You want to make sure you pay the money back, or you're smart enough to put together deals with investors where you don't have payments. But as long as you're not borrowing at compound rates, the compounding works in your favor as far as the rents and prices. And it's just remarkable over time. You and I can look back. We have a view in the past, and we know what houses cost 30 or 40 or 50 years ago. We know what rents were. And if you do the math, it's not a big number. It's not like you're going up 20% a year. If I go back and look at numbers back in my early days in this business, and I plug it in my calculator and say, how much of my rent's gone up and how much of my price has gone up, the number's generally 4 or 5%, someplace in that range. But you do that over and over and over again, and now you're compounding $300,000, not $30,000. 5% of $300,000 is $15,000. I was making 5% of $30,000. I was making $1,500 a year. That's a big difference.
Yes, it is.
It just keeps.
Once you start talking about hundreds of thousands of dollars, who was it that said 100,000 here, 100,000 there? Pretty soon you're talking about real money. So,
not much longer, I don't think. Pretty soon you're going to be looking for a car you can buy for $100,000.
Boy, you're not kidding. And Tesla's already beyond that. We are running out of time, and I am going to ask you to put on your prognosticator glasses and look ahead. You said something recently that I just enjoyed so much. When we were talking about inflation, and you said, well, that we're going to have inflation. That's the way government works. We are suffering right now at the gas pump, at the grocery store. I think a lot of people want to buy a house, but feel like prices are going to come crashing down any day now. And even our mutual friend, Robert Kiyosaki, that I have respect for, he has recently taken a job with a silver merchant, telling people they need to go out and buy silver in order to protect themselves from the coming bad years. what do you see ahead for the average investor who's maybe buying a house a year? Is this a time to be nervous or a time to move forward boldly? Or what are your thoughts as we look ahead to 2022?
Well, I write a newsletter 6 times a year, and the one I just wrote and just sent out, you'll get it soon. It talks about, should you be playing offense or defense? You know, what side do you want to be on? And of course, and you know, all of us who like sports and like to watch college football know that you need both, you know. But the game that we watched last night was just a defensive battle, and it wasn't much fun because it was such a defensive battle. Offense is more fun, but you have to be wise enough to play offense at the right time. And so you should have goals when you buy something. I mean, you should buy your property, if it's your first property or your 50th property, your next property, you should buy with a specific purpose in mind. And if you're just starting and you don't have any money and you don't have much income, you're probably going to buy a house with very high leverage, which means it's not going to produce much income. You can't squeeze blood out of a turnip. You know, a turnip. If you got a house that's fully financed, you shouldn't expect that house to make you any money at all. And I just sold a house last month, and actually it was the last day of November, so a month and a half ago now. And I'd owned that house for 16 years. And that during that 16-year period of time, it didn't make me much money. I didn't buy that house because it was going to make me money every month for 16 years. I bought that house because at the end of 16 years, I knew it was going to be worth a lot of money. Yeah. And I sold it for about 6 times what I paid for it. Well, that's a pretty good increase over 16 years. Sure but is. During the time I held it, it didn't make me much money, which is okay because I didn't need more cash flow. So you buy something if you need the cash flow. If you need cash flow today, you'll have to learn how to structure things and produce cash flow today. It has to do with the financing, not the house. And that's a breakthrough idea for some people. But you know, I could buy a $300,000 house on terms that pays me $500 a month. Somebody else will buy that $300,000 house and not make a dime. Somebody else will buy the $300,000 house and will lose $500 a month. It depends on how you finance it, not what you paid for it, how you finance it. You know that.
Very good.
There's a lot to learn about this business. But to your point, I would encourage people, if you haven't bought a house yet, to start looking. Learn as much as you can about the market. You may find a good deal in this market, but even if you don't, you're learning the market. And when things turn around, if somebody is trying to sell a house for down the street from me, somebody got one for sale for it was $550 and now it's $450, and they keep dropping the price. Well, at some point that house may become a bargain to somebody. And that was a house that's right next door to a house I paid $50 for. So, you know, I have a hard time paying $450 for one I paid $50 for. But I'm watching it, you know, because at some point I'll buy that house if it's still for sale at some price, you know. So you watch houses, you watch neighborhoods, you get more information, and that allows you to make better decisions. And then you learn how to make offers. And as you point out, probably the step they need to take is read the book.
Absolutely. And the name of that book is Building Wealth, One House at a Time. This is the second edition. It's updated. And I think people will enjoy it. I've been in the business like you for many years, and yet it brought things to my attention that I hadn't even thought about for quite some time. And I appreciate you taking the time to put it together. We appreciate having you here on Real Estate Coffee Break. First, if somebody wants to get your newsletter, do they go to johnschaub.com or what's the best way?
That's the best way, johnschaub.com. And as you know, I've recorded some courses, so they can get on that website and they can learn a lot more about me.
All right, very good. And why don't we need to put you on the Zoom platform, and let's do a seminar that goes all over America. That's what
a grand idea. That's a grand idea.
All right. Well, I've got a wife that knows how to do that. I can't do it, but Margie knows how to do it. So.
It's a good thing we're both married.
You're not kidding. Oh, somebody asked Margie the other day if she'd ever, because we've been married 45 years now, way to forever together. And somebody asked her, have you ever considered divorce? She said, divorce? No. Murder? Yes. So let's leave it at that. John Schaub, thank you. As always, please come back and visit again soon. Go see those grandkids. You've got how many now?
5. 3
Good.
right here in town. I see them all the time.
You're just prolific, and we better leave it at that. Thank you so much for your contribution both today and to our industry. God bless. John Schaub, thank you, sir.
Thank you, John. Take care.